please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, it's curtains down on FY18 itself, and let's run you through what the equity markets did in this year. We start off with the mother market. We had the US markets, that's the Dow, that gave you returns of around 15%, and the Japanese index as well gave you returns of more than 10%. So from the developed markets, they were outperformers. Well, from the emerging markets, you had the Brazilian index that did very, very well, though in dollar terms, those returns are a tad bit less because we did see some weakness in the Brazilian real. Well, we had the Shanghai market that was a bit of an underperformer in this past fiscal, but remember, we did have the Chinese yuan that moved from around 6.9 to around 6.3. That's why in dollar terms you are seeing some positive returns on the Chinese markets. But moving on then, we had a lot of challenges in the past year. There was a rollout of GST. We also had the implementation of GST that was announced, in fact, of LTCG rather, that was announced in budget 2018. And besides that, we had a couple of global factors like the Fed rate hike towards the end of the year. We did have the Nirav Modi saga that did play out. And finally, in March 2018, all eyes were on Trump's tariff tantrums. So those are all the factors and those are all the challenges that were laid out for us. But how did we do in this year? Well, 3 quarters we did well. Unfortunately, in the last quarter, a lot of those challenges came up, and that's why we did see some profit booking. We were down nearly around 400 points odd. And if you take a look at the last few fiscals, well, this year we did put on roughly around 11%, but otherwise not too great returns in terms of what we did in the last 5 fiscals odd. But moving on then, if you just take a look at which were the indices that did well, the Realty Index, the Metal Index as well in there with big returns. And in fact, the IT Index as well did quite well. The breadth of the market as well, fairly stable. So it was a good year in terms of those indices. But what was losing out? The PSU Banking Index, that took a bit of a knock. We had the Pharma Index as well. That was down nearly around 20%. Why was the Pharma Index down? Well, a couple of those heavyweights. And in fact, the big nifty losers included some of those pharma names. 3 out of the 5 stocks that are up for you on the screen, well, they belong to the Pharma Index. Lupin was down more than 45%. But then what was gaining and what did well in the last year? You had Bajaj Finance, it gave you returns of more than 50%. Hindustan Unilever was expensive valuation-wise at the start of this fiscal. Well, at the end of the fiscal, it was still expensive, but it gave you more than 45% in terms of returns, and Reliance Industries as well in there with a return of more than 30% odd. But let's focus really on the broader markets. Jubilant FoodWorks, that doubled your money. NIT Technologies, that doubled your money as well. And Titan, till this fiscal, it was not part of the Nifty. Well, in the next fiscal, that's in April 2018 itself, it'll be part of the Nifty. And in fact, you had a whole host of other stocks that did give you returns of around 70% to around 100% odd. But obviously, when there are big gainers, there are some big losers as well. HDIL's in there with a loss of around 50%. You have Balrampur Chini as well that lost more than 45% of its market capitalization. But let's cheer up the screen. In the last year, you didn't get 2 baggers, 3 baggers. You even had 10 baggers. HEG gave you returns of more than 10x. You had Goa Carbon that was up 7x. Graphite as well gave you big returns, and a whole host of big gainers up for you on the screen. But we'll wind this down then by telling you that the Nifty gave you returns of more than 10%. And in the last fiscal, well, the total market capitalization added of BSE listed stocks was 21 lakh crore rupee.